investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the S&P 500 ETF, ticker symbol SPY, also known as the spiders. And as I zoom in here, you'll see that I left my lines on the chart from last week's report, where last Friday I said we would most likely go higher, with the end of that line right there at 311.38 being my target price. Now look at where the market closed today. Pretty amazing how technical analysis is being used as a forecasting tool, but most importantly, we use technical analysis as a risk management tool. So if you have any long positions, it would be a good idea to protect against any kind of a downside. You want to protect your profits, and if you take any new positions right at the top, you definitely want to protect yourself from any pullbacks. And as you can see down here, we have 1, 2, 3, 4, 5, 6, count them right there, 6 green candles in a row, and that's known as a stale green light. And that's number one. We have a gap below the market now because the market gapped up, and we see that gap on slightly lower volume. So what does it mean when we see the volume dropping as the prices move higher? Well, it tells us that the buyers are losing some of that momentum. As I go on, you'll see that the stochastics down here and the CCI down here are both in an overbought condition. So what does that mean for next week? Well, I'm going to condense my price axis, and I'm going to forecast that Monday, maybe even Tuesday, we're going to go slightly higher to press into record territory. But the divergence between the moving average and where the stock is right now is quite wide. So I think that later in the week, next week, we're going to see a pullback to fill that gap, just like that. So again, early rally as the momentum continues into new high territory, with a pullback to fill the gap, with this right here as horizontal line being my gap fill target. So keep an eye on the markets next week. As we look at the Qs, ticker symbol QQQ, you'll see a similar pattern where I forecasted last week that we would move up early in the week. Monday and Tuesday we did that, and then I said later in the week we would most likely lose some of that upward momentum. And that's exactly what happened, with the end of that line right there being at 201.97. Look at the low for today. It's 202. We're within 3 cents of that target right there. So again, the charts were extremely accurate. Now the difference between the Qs and the S&P is that we're still seeing an increase in the volume here on the NASDAQ or the tech sector. So we could, again, see some continued momentum Monday and Tuesday, but eventually, like the spiders, I think we're going to pull back just like that, maybe see some profit taking to fill this gap down here. So I'm going to leave that as my target. I'm going to erase these lines here just to clean the chart up just a little bit for you. And again, notice the stretch of green candles at the bottom here. We have 6 green candles in a row. Again, the stochastics are overbought. The CCI is moving into overbought territory. But this wide divergence from that moving average tells us that we could be reaching that stretching point. So keep an eye on the downside and make sure you're monitoring the charts. All right, now let's hop right to the VIX. That's ticker symbol VIX. This is the volatility index. I did say we would go down to test that support level, and I did believe that we would break out below that. We did not do that at all. However, I think we could very well do that Monday and Tuesday, where I think we'll see a breach right there of that support level, and then I think we're going to move back up to test this 20-period moving average. So I'm going to put this as my target right there. You can see that the stochastics are moving lower. The CCI is still moving lower. That's why I think the VIX is going to break out below that support level. Remember, the VIX is inversely related to the S&P. So a slight pullback in the VIX is a slight rally in the S&P. a rally in the VIX obviously is the opposite for the S&P, where we'll see a sell-off. And again, that's why I have my target set right there. If we look at a more broad-based index, which is the Russell 2000, I said we would most likely reach into record territory. We didn't do that this week, but again, I think we could do that next week. This is, again, a more broad-based index that you have to keep an eye on as we go into the last quarter here of 2019. We could see that year-end rally, also known as the Santa Claus rally. You see the CCI is starting to move back up while the stochastics are still moving lower. So we have mixed signals there. But again, the Russell 2000 being more broad-based does not always follow the other indices. It could be on its own and you could have the S&P drop while the Russell 2000 is going higher. But overall, I think by the end of the year, I think all the markets are going to set new record highs. I think everything is looking very bullish. Overall, short-term bearish, but overall bullish. And we, again, want to maintain our positions using good risk management technique. Now, last week, I did not analyze the diamonds. I'm going to do that this week. You can see, again, we have red mixed with green, but the overall effect, the net is record highs once again. I think we're going to continue higher in the Dow. So I'm going to condense that price axis right there. And just like the other markets, as I mentioned, I think early on we'll see a rally into new record territory, and then we'll see that profit-taking pullback for the short-term traders. So I'm going to get rid of these lines down here again to keep the chart nice and clean for you, easier on the eye. And then I'd like to also analyze OHUSA, which is a high-yield dividend fund that's managed by Kevin O'Leary. Last week I said that you have this price action kind of stuck in this narrow trading channel. I said we would most likely go up to the top of the channel and then start to pull back. Today we closed right exactly at the top of that channel. Again, I think we're going to continue with some of that upward momentum. We might even go just a little bit higher here like that and then pull back later on with the rest of the markets. So keep that in mind. I've been analyzing this ETF because it's a good cross-section of stocks like Apple, Home Depot, Johnson & Johnson. I think you have Verizon in there in the top 10 holdings. So this is a good one that I think you could use as an indicator outside of the major index or even the Russell 2000 to give you a good cross-section of what's happening with some of the more active stocks, including Apple, which is a tech sector stock. So you have a great weekend. This coming Monday, we're having an open house Q&A session. Just go to the Market Guys website. Right there on the front page, you'll be able to see a register now link. Just click on that. It'll bring you to the registration page where you can save your seat. Just put your information in there. You'll get a reminder email so you don't forget about it. It's an action-packed hour where I will be analyzing stocks and answering questions, and I think you're going to get a lot out of that. So have a great weekend, and we'll talk to you on Monday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.